Rollability. This is something that I always like to check before I sell put options. It is kind of like my exit strategy, if you will. It's knowing where the exits are before you get into a trade, which I think is very important. So that's what we're going to cover off today. Firstly, it's not financial advice. This is just what I do. Don't copy strangers on the internet. That's never smart. Do your own research, make your own decisions, and get really good at managing your own money. Now, before we do start with things today, I just want to again invite you to the 50K Club. If you are not in there already or if you haven't checked it out, the link in the description is below. Essentially, it's a place for options traders to create a consistent monthly income without the need for a seven-figure account. Hence, 50K Club. What you'll see in there is me trading my $50,000 account using options and swing trading, as well as the strategies that I like specifically for a smaller account. The first 50 members will get access for just $50 a month, and there's 35 of us in there already, which is awesome. So check that out if you'd like to join us. The link is in the description below. But let's dive on into it. So this is all about knowing your exit first. I don't know about you, but I have said in the past, if it goes against me, my sold put, I'll just roll it down and out, right? We'll be okay. But roll it to where? Because some options simply don't roll well, and that's how you get stuck. So you've probably, maybe, I have been in a position before where I've gone to roll and I'm like, I can't. Or I can, but I've got to go out 6 months and tie up all my capital. And especially when you're trading a smaller account, you don't want your capital tied up for a long period of time. And you definitely don't want to accept assignment on something that is just continuing to drop. So let's have a look at how I actually check rollability and plan my exit before I enter. So the first chart that I want to look at is NVDA. Now, what I look at when I'm checking how might I possibly roll something that I'm in is I look at the current at the money or the very first in the money put option, and I'm looking at, okay, if I had to buy this back today, what could I potentially sell in the future that's worth that amount or less? Because ultimately that's what a roll is, right? We're buying back our current contract and we're opening one in the future, ideally at a lower strike. So we're trading at the moment at, call it 192.50. I'm going to look at this in bar chart only because the market's closed. If the market was open, you could very well do this inside your own broker. And I'm just going with the latest trade price for looking at each of these contracts. So what I like to look at is the current week's expiry, and we're coming to the put options, and I'm looking at this 192.50. Now, if I had to buy that back, it's going to cost me $384. Let me get a pen and paper so I don't lose that number. It's going to cost me $384. Now, let's go into the future and see what I might be able to roll it down to. So if I'm then coming up, and let's just go out 1 week, because I like to keep my expiries as close as possible, especially if I'm rolling. I actually don't want too much time because it's giving the stock price longer to go down, right? Yes, it can come up, but also it can go down further. So let's have a look at the 710 would be the next weekly expiry. Back down to my put options, and I'm looking for something that is at or above 384, which would be realistically this 190. So if I wanted to roll out by 1 week, I could pretty much roll down by $2.50 in strike. It's probably not enough to get me out of trouble. So let's have a look at, then I look at 2 weeks, which would be 717. Come on. Back to my puts. So I could go to, maybe I could get as low as 185. 187.50 I probably could. 185 I might be able to. And then I look at, well, if I had to go out a month. So if I went to 731, what would that get me? And 180. Let's call it 180. So let's say safely, I could probably roll down from where we are now to 180. So then I'd be looking at, okay, that's a distance of, from where we are now to 180, that's a distance of about 6%. So in my mind, when I'm planning out my future trade, I'm looking at, okay, this is and it's all rough guesstimates, right? None of this is guaranteed, but it gives me an idea of the potential distance that I might be able to roll to, right? Now, if I was going all the way out to the 731 contract for no credit, literally just it would kind of come out in the wash and be a break even, that to me is a very defensive play. That's like, let's just roll this thing as low as possible. I don't care about getting any extra credit. I just want my strike as low as possible to try to avoid assignment. So that's what this kind of play would be. But now I can at least visualize this. So before I enter my trade, I can visualize, okay, this is maybe what an exit might look like if I had to roll. And either I look at this and I go, I'm okay with that, or I go, actually, I wouldn't be okay with that, right? Let me show you on Soxal. Soxal is one that I like to trade very often. Some people think that you shouldn't do options on leveraged ETFs. I quite like sold puts on and covered calls on leveraged ETFs. I have made a lot of money doing that, and I will continue to do that. But one thing I check for is the rollability, because I do definitely want to be able to roll my way out if something goes wrong. So if we're looking at the same thing, so let's say 215 at the moment for Soxal. Let's come on over to bar chart and find some options prices. So firstly, we're looking at the current week to get our base price. Okay, so the 215, if I had to buy that back, that's going to cost me $21.35. Okay. And let's go out a week. Let's see what that looks like. 710. Puts. So I'm looking for 21.35. So already, I mean, depending on which one of these I can get filled, I can probably come down to as low as 195. So I'm able to move from where I am now down to around 195. So that kind of a distance, right? And then I won't do the 2 weeks. I'm just going to go straight out to the 4 weeks to get my comparison. So if I want to play super defensive, 21.35, I can probably come all the way down to 160 and still get a little credit, right? So where's 160 on my chart? That's all the way down here. And that would be a drop of roughly, call it 25%. So that, again, it's not to say that I could absolutely roll my strike by 25% if I had to roll out a month and play defensive, but at least I know that at the moment it's potentially possible. And that's what I need for my exit strategy, to know that it's potentially possible, that if this continues to come down and goes against me, that I've got some room to roll. And that's what I like with options trading, is having room to roll and time to roll, right? I mean, we could continue to play this out. You can continue to work out what's a real worst case scenario. Well, what if we go till the August contract? August contract on the puts, 21. So I could get down to, call it 140, right? I wouldn't do that. That definitely wouldn't be my first play to roll that far out. I like to, like I said, I like to keep my strikes as close as possible in time when I'm rolling because I like to have that bit of extra control. But that would at least get me down here out of some trouble, right? And then if you're looking at something on an ETF, on a leveraged ETF, you can go back to the chart that it is representative of and kind of, figure out, okay, so that's what the 19th of May. This candle here is the 19th of May. What would it mean for the actual index? Well, that would mean kind of down here somewhere, right? So on the actual ETF would be a 16% drop. So it gives me an idea of what would have to happen to the actual underlying in order for me to be in a position where I think, uh-oh, I'm in trouble. And that's what I do. So that's checking the rollability of a stock. Now, you might do this with certain stocks and you might realize, oh, I can't roll. I just can't. And it's good to know that before you enter the trade, because if you enter the trade knowing that, then you're going to have a different exit plan versus figuring it out once you're in it and you need to roll and then going, there's nowhere to roll. I'm stuck in this. So if your exit plan involves a roll, at least come and have a little look at what that roll might look like. Prices will all be different in the future. The rollability will be different in the future, but at least you've seen where the exits may or may not be. So I hope this video was helpful. If you're interested in learning a bit more about these kinds of strategies, watching me trade a smaller account, absolutely, again, you're welcome to come and join us in the 50K Club. The link is in the description. And that's where we kind of look at this sort of stuff in much more detail. And of course, where you can watch me trade my $50,000 account. So have a great week trading. I hope this was helpful and I'll see you in the next video.